This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Trading Frank. It's approximately 8:51 p.m. on April 2nd, 2020. Welcome. This is the midweek strategic webinar that we do. Delayed by a day. Normally we do it Wednesday evenings. Full disclosure, this is purely for financial education, not for solicitation or advice. So let us begin. The quick reminder, the session will be recorded. The first thing that I do, as you all know, because that's the fastest that when it's uploaded, I post a link to GoToMeeting, the recording link, so you guys can click that. It's posted directly on the Twitter feed, the real-time Twitter feed, and you can listen to it. The YouTube recording normally takes a little bit longer to upload. Nowadays with the traffic and Google and stuff, it's taking it longer than normal, and that goes up a bit later on, if not first thing tomorrow morning. So just a quick reminder. We also do have a terrific Instagram channel, and time to time, whenever I have time, mostly in the evenings, every day, I post a couple of highlights of options charts and a few other things that people find useful. So certainly follow us on Instagram, clueless8_trading, and definitely pass the word around. On that note, we have another terrific member, Paul, who just joined us. So let us begin. So I'm going to barrage through a couple of charts, put in a couple, cover a couple of broad points as to what's going on, which you guys already know. And of course, all the detailed information is posted on the real-time Twitter feed throughout the day. So you should have absolutely no problem keeping in touch with the market, whether you're actively trading or not trading that particular day. You can certainly catch up and get all the pertinent details on what's up. So here are the broad points here. We are in the throes of absolutely intense, extreme volatility. No question about that. There's nothing we can do about it. We're held hostage to the algorithmic high frequency trading, what we call algo HFT supercomputers, the black boxes, the robotic boxes, and they move at lightning speed. The speed of the market is mind-boggling, and I don't blame anybody who cannot keep up with it, whether you're an active trader or a swing trader. The minute you take your eyes off the screen, it's either up 100 or down 100, up 600, down 300. The markets are moving on two major variables right now. The coronavirus stuff is not, believe it or not, having that much of an impact on the markets yet. The cases in New York haven't started slowing down, but neither are they accelerating to any degree that is a major that would cause another level of panic. What's moving the market is basically this at this point is, as you know very well, the oil situation. President Trump finally came around, and a couple of other senators from Wisconsin and Nebraska and all these shale producing states basically have put on the pressure, and now they're engaging with the Russians and the Saudis to come to some sort of agreement to stabilize oil prices. Oil was up at 1.25% today, and I believe ended up somewhere in that range. So the key is that the markets want to go up. The markets are a coiled spring, and there is in every single measure, and of course this is quite a different time, we know that, with the coronavirus pandemic, that the markets are let's put it this way. What am I trying to say? So the markets are basically like a coiled spring, and at any sign of whether it be oil price stabilization, whether it be a slight bit of good news about the curve, the coronavirus curve flattening, you see massive moves, massive moves. In the meantime, you also have a lot of hedge fund activity. Now, this, as traders, I want to impress this upon you guys because we deal with it every single day. A lot of these automated algorithmic high frequency trading programs that are unleashed in the market, pre-market and throughout the day, are run by institutional funds, primarily hedge funds. And what they're doing is they're day trading the market at a ferocious speed. And that makes life very difficult for all of us. for all of us. Every day we have a couple of big winners and we have a bunch of losers. Then those losers turn into big winners, and the ones which were going up come down. You know, it's almost like it's mechanical madness. All right. So one thing I do want to impress upon all of you, that I'm trying my best to keep a straight head, because these are very, very weird times, and try to put out what I am observing, what I'm thinking, but the best of technical analysts. And I'm certainly not the best. I just look at things in a very different way. Is You cannot even the best of the technical setups can break down for an hour, 2 hours for the day, and then head back to where it was supposed to go. So just relying on the very precise technical metrics that we look at does not always make money on a single day. And it's very frustrating. I know that. But there's nothing we can do about it. Okay, just keep that in mind. Overall, there is selling exhaustion on almost every single metric, including one that I'm going to post tonight. Tom McClellan, the founder, the son of the original founder of the McClellan Oscillator, put out his charts today, this evening. All of you can sign up on his website for free, his newsletter. He's absolutely amazing guy. That the level of bearishness, it is at a degree that is just mind-boggling. That's mind-boggling, and a lot of it has to do with the massive mechanical selling that happens when hedge funds blow up. I'm sure yesterday and some parts of today there were some unknown hedge fund out there, like one that they never talked about, but I praised you all on my previous webinars, Ronin Capital out of Chicago, which blew up and caused a 900-point drop in the market. When was it? Last Friday? And it all happened within an hour. So I'm sure there's a whole bunch of them that are being forced out. In other words, what we call forced margin sellouts, which are large sums of money. Certainly in the millions, sometimes in the billions, and those things cause havoc in the market. So you have oil, you have massive hedge fund activity, and of course you have the absolute panic about the coronavirus situation getting worse. So you got all these things, playing upon. On top of that, you have companies which are coming out and postponing or withdrawing their guidance, and of course that on that particular day can hit the stock. In this particular case, we bought Shopify right at the lows, pretty much, give or take a few dollars. And I was wondering why Shopify was down 34 bucks, and then they had withdrawn their guidance. But if you read into their press release, they specified that their numbers were actually better than what they were expecting, but they pulled their guidance. Okay, so the stock got hit by 30 some points. At one point, it was down 43 points. And Shopify is what we call Amazon Junior, and that company can jump up just like Tesla is after hours. So those cheap calls, God knows where they're going to be. They were at 2 or 4 cents at the close. And I bet you they're going to, the last estimated value on Thinkorswim on the mobile app was 40 cents. I mean, think about that, 2,000%, right? How many calls could you have bought at 2 cents? I mean, think about that. I got a bunch of it. I left it there. I said, hey, it's what can I do? And then I'm probably going to make a decent, tidy sum at the open tomorrow if Tesla remains up where it is, because it turned around 100 points or so, right? And the reason they did that, because they released their numbers, their sales numbers, and they were not much better than expected, but they were slightly less than what was feared, which is a great. They're expecting the worst. They're going to sell no cars, and they just sold a lot. So this is the way it happens. So that's why I call the market a coiled spring, and we are in a very definitive bottoming process, and I'm going to show that to you. And like I said, anything can happen. It's an absolutely crazy market, but at least I have to go by what I've seen over the years, even though this time just it's far more violent, the movements, than any time previously. So that's basically it. Okay. we have a lot of earnings season is going to start off full blast starting next week, and there's going to be a lot of fireworks. Some stocks are going to go through the roof. Some might fall, but how much more they can fall? If they're down 30% from the top, the chances of them falling another 40% is somewhat low, and I'm sure you guys understand that. So in a way, it's actually quite lucrative to think to believe that we might get some, I mean, there's a lot of stocks a serious bargain. There's no question about it. But when it comes to earnings, even a slightly better outlook from the companies during their conference call or when they release their earnings, the numbers are not that bad, will jettison these stocks big time higher. So just be prepared for that and have some cash, play those, because this is definitely a speculator's game. Okay. So saying all that, the last thing I'd like to say is markets will bottom well before the news gets better. No question about it. No question about it. That's why you get these violent whipsaw rallies in the midst of when everything looks like it's going to hell in a handbasket. So in order to so the bottoming process is not a 1-day process, 2-day process. Sometimes it takes a week, 2 weeks. All right. So if you think that, okay, this is the definitive bottom, and that was it, and from this point on, the markets will continue to just go higher every day, well, it's a complete myth. It doesn't happen like that. Many of you new traders, you're looking at this stuff, you're saying, what the heck? And I don't blame you. Even some of the professional traders, including myself, people who have been doing this for 50 years, 40 years, big shot guys, they're in a state of shock and awe. Forget about us. We're still scalping some decent profits here and there on multiple trade alerts, and then setting up trades. And on that day when we set up the trades, it's not working. But 2 days later, we're up 100%, 200%, 60%, 80%. You've seen that. So there's nothing. That's not a myth. That's a fact. Okay. Are you guys with me so far?
Yeah. Yes.
Okay. Okay. Sounds good. So just sharing my thoughts. So saying all that, just every morning when I wake up, I have no idea what to expect. And that's just the type of market it is. I check the futures at around probably 5 in the morning, and then by the time the market opens, it's a different story. So there's nothing we can do about it. For people who have time, and of course everybody has time because everybody's working from home or staying home, and they can scalp things. You can put little money in the game and then catch some of these technical intraday lows using the 15-minute chart, including the 1-hour chart that I keep on publishing. And of course, you can see stuff on your computer on individual stocks, and I show that individual stocks too. You can play the ranges. Something's down $15, then within 2 hours it could be up $5. That's a $20 range that you can play with some calls. Now, the other problem with the market is, which as all you traders know, is options prices, and this is really frustrating, and it makes me really angry, that options prices are very distorted. The bid-ask spread on options are horrendous, like 60 cents to $3. So I'm putting in it to buy it for $1, $1.10 on the lower end of the scale above the bid, and the next thing you know, they're moving it up. And then when you buy it, they drop it. So if you bought 4 calls at, let's say, $2, the minute that they give you those 4 calls at $2, you look at it, and now it's $1 to $3. In other words, you lost $1 right there for no reason. So it's a very, very distorted market. A lot of it has to do with automated market makers, automated machines, which are putting out the options prices. Human traders are no longer on the New York Stock Exchange floor, as you know. So there's like a complete imbalance. And I'm sure you guys have gone through it, yes or no?
Yeah.
Yeah, and there's nothing we can do about it. There's no complaining to do, nothing. It's just the way it is. It's very frustrating, and I'm talking about on very active stocks. Forget the biotech stocks, which always have a wide bid and spread. But I'm talking on active stocks. It's like that too. It's really, really tough. But we have to live with the reality of what's going on. So saying all that, let me start off this. Let's get into the thick of charts here, and then I'll take a few questions. Let's take a look at what I was showing before, which is a very long-term chart of the stock market going back to 2007, more than a decade, right? So this was the housing crisis crash from 2007 to 2009, and this is where the last bailout came. And this is the next bailout that we're dealing with. Except this bailout from the government is it's ferocious. I mean, it is. They said it's almost twice more than the 2008 2009 bailout. And of course the firepower is there. That's another point that I want to make. All this money that's going into the economy, 2 trillion, 4 trillion, they always have a lag effect and prop up the markets and the US economy. The lag effect is not 1 day, 2 days, it's 3 months, 6 months down the road. You see you see the results, the positive results of this. So even though the Fed has said they will unlimited buy all types of securities, not stocks yet, ETFs like Japan did, exchange traded funds, that's like buying stocks. The Fed hasn't said that yet. But the thing is, but everything else, mortgage-backed securities, MBS, and then they buy treasuries, U.S. treasuries, high yield bonds, which are similar to stocks. They're the proxy for stocks. They want, they're backstopping the economy. Then you have President Trump and his team unleashing a massive stimulus program. Democrats are in the same boat too. So all this has a very positive effect down the road, even though short term, it might you guys might not see it. Just try to understand that, okay? So saying all that, let's take a good look at this long-term chart and why I think that we are in a bottoming process. This is a monthly chart of each bar is a month, so a lot of stuff happens within a month. A lot of stuff happens in 1 hour. So imagine what it happens within one of these bars. But this is the monthly chart going all the way back to the bottom, 2009, and from here 2007. Now, as you can clearly see here, very simplistic. And this chart was drawn a while ago, if you guys remember. And I did say that we were going to hit the 3,400 mark, and boy, did we go above 3,400. And we were tracking the same chart. So the uptrend channels are still intact. So when they say the bull market's broken, they're lying. Where do you see the bull market broken here? Yes, we're coming to test the lower end of this macro uptrend channel, the uptrend channel, these two lines, obviously, and it broke. It broke. When was that? The time that we fell below 2,200 last week. So is that a definitive bottom? Sure, looks like to me for now, unless we break it. So anytime we break below this, that's when you can technically say, yes, the bull market's broken. And we can talk about this 1,800 level that you hear a bunch of these people talk about quite often. And they were dead wrong on the way up, and I believe they're going to be dead wrong on the way down, because they never told us to buy stocks here. They never told us to buy stocks here. They never told us to buy stocks here back in 2011. Or 2010 or 2009. They told us not to touch the market here in 2000 after the December 24th Christmas Eve massacre. That was the last low that we are holding at this point, and the markets went berserk. So my question is, why should I trust them? Why should I trust these big so-called talking heads when they tell us we're going to 1,800? Is it possible we go to 1,800? Sure, no question about it. But unless the technicals completely break from a long-term perspective, then there's no reason to think that. And I'm just showing it real simple. Anyone can see that. So at this point in time, we're basically fighting this zone here, which is extremely important. And that's around the let's call it the 2,400 level, slightly below that. Slightly below that. Nowadays, futures move 100 points back and forth, right? 800 points, 900 points. So any of these levels can get retested again. No question about it. But so far, I simply look at one of the most powerful and most simple indicators, internal indicators that any of you can follow. Just look at it, that's all. And that is called the stochastics. So if you look at the stochastics, every single time that we have made a significant bottom, aside from 2009, when we went below the 20 mark, right? We dip below this. We generally tend to have, and we have 4 instances of that in 2011, in 2015, in 2018, December 24th, and now. So the monthly indicators are showing us in very simplistic term that if I look at it, just squint my eyes, take a look at it. Maybe I'll make this bigger. Hold on, for you all to see. There we go. So we are basically there. So we are almost there. Like sometimes I joke around and put, "Mommy, are we there yet?" So we're almost there. Now, that doesn't mean that it's going to be tomorrow or the day after, but it's telling us that we are getting there very fast, and there is massive selling exhaustion. Selling exhaustion means that there are really no more sellers. I mean, who's there to sell? Hedge funds are selling. Either they're selling or blowing up. Mom and pop has basically moved everything into cash from their mutual funds. Who's there? So a lot of smart money is buying, by the way, and there's no question about it. And but the thing is, they're patient. They're patient. Look, as traders, we're impatient. We want to make money every hour. We want to make money every day. It doesn't work like that. I'm impatient. If something doesn't work 4 or 5 days, I'm like, what the hell's going on? And then the same thing goes nuts. And it's happened way too many times. So as newer traders, many of you have joined us recently, you guys are more impatient. So we're all a bunch of impatient traders. We want to just think that everything just happens right now, right there, right then. And many of our trades do. But that doesn't really make that does make some very decent money, but doesn't make the really big money. The big money is set in place, and then as the markets surge, that's you sell. And we have done that a few times. But just let's admit to ourselves we're all very impatient, okay, and not making excuses about it. So once you admit that, you're a much better trader. So saying all that, I believe that this is a bottoming process because there were, like I said, 4 major pivotal instances of this happening, and we can see that very clearly on this chart. The channels are still intact right there, unless we break below that, and we did last Monday. But we had a big, huge reversal after that. Markets went up 2,000 points, 1,000 points, 1,000 points, 3 days in a row, right? So unless we definitively break below the 2,300 level, then basically at that point we can say, okay, we're heading down. The bull market short term is broken, but otherwise, no. Let's take a look at the next chart. This is a very long-term chart, the longest time frame that I show. The next one is the weekly. This is the weekly chart. And the weekly chart on, this is the S&P 500 futures, of course, the overall market. And you can see what's going on here. We have a massive candle from the 23rd of the week of 23rd of last week of March. We have this big reversal that we saw. Then this huge body of this candle, the longest that I've identified since 2018. I don't see a candle this big anywhere. Do you guys? I haven't seen the candles this big otherwise anywhere, but neither have I seen that. So you have to respect that these are these big volumetric movements that happen in the market. Nowadays, like 1,000 points up and down is like, what a sneeze. In the old days, we'd be just like, what the heck is going on? So saying all that, every reaction has an equal and opposite reaction. It's the law of nature. It's Newton's law of motion, and I'm telling you right now, and it's exactly the way things are playing out as we speak. So saying all that, I have some very precise lines drawn, and that's exactly where it went. You can see that. Let's zoom in. There we go. We hit that downtrend. These 2 red lines are downtrend lines, and it hit exactly that at around 26.36, and we can start. I'm just showing you. This is the young, slightly shorter version of the monthly. So anyway, you can't really trade off the weekly charts, but at least you have an idea where we stand, So that's the way I look at it. Now, the other thing that you have to keep in mind that has never been in U.S. history, I know this time is a little bit different. So I'll give it some room, that we have stayed outside these 2 lines. These blue lines are Bollinger Bands. There, this one and this one, right? Lower Bollinger, upper Bollinger. It's funny that after this huge, like 30+% drop on the Dow Jones Industrial Average, 24.5% drop on the S&P 500. Isn't it strange that the Bollinger Band on the upper Bollinger is still pointing higher? You guys notice
Yep.
that? It's very strange to me. You know, like what will it take for this upper Bollinger to start to come down? You know, how much pressure do you need? How much selling do you need? So it's kind of a weird thing, you know, just so you know. The lower Bollinger is getting stretched out. And what has never been seen in recent in multi decades of market history, how many weeks we have stayed outside the Bollinger Bands. I'm going to make this Bollinger Band a little bit thicker. 1 second. There, that's better, so you guys can see it. 1 week, 2 weeks, 3 weeks, and today we were actually inside the Bollinger yesterday, and today we went inside the Bollinger Band, and then we slipped out of it. This week, this is not today. My apologies. So there are multiple weeks, 1, 2, 3, 4, that we are hanging out outside the Bollinger Bands. I mean, it's just never happened. So there's no precedent for it. Like, what do you compare it with? So whichever the case, the market always attempts to go back inside the Bollinger and then try to creep up to some of these levels that are drawn here on the chart. So I'm you know, when we look at the daily and stuff, you'll see I've said it many times, 2700, 2720, possibly 2780 on the best case scenario, which brings us up towards these levels here. But this is a very strange phenomenon that's going on. Now let's take a look at the same thing that we looked at on the monthly, ladies and gentlemen, the bottoming process. And that bottoming process is taking place here. Right there, right there, right there. So can it slip and slide a bit back and forth and create this massive volatility as it's making a bottoming process? Yes, absolutely it can. And this is on a weekly basis. Let's move on to the daily. This is the monthly, this is the weekly, this is the daily. Where's the daily? And notice another thing, whether it's Think or Swim, whether it's your mobile app, whether it's your computer, you notice like everything's a little bit slower. Did you guys like realize, like, you know, you put in an order, it's not like, yeah, sometimes it's like really fast, but a lot of the times, like when you pull up the option screen on Think or Swim, whatever platform that you use, it takes like a bunch of seconds for the thing to populate. And that's because, very simple, everybody everybody is working using a computer from home. So there is a network, and you understand that better than anyone, Z, that there's network congestion. And even when I'm populating the charts, you know, it takes not a few minutes, but it takes probably 15 seconds for the chart to populate because all the servers are getting congested. So anyway, so this is the daily chart here, and one of the things that keep me in the game, and I would rather be buying dips than selling everything and trying to short everything, in which case most of the times you get totally burnt, because by the time you're shorting something, it's already low, and then comes in 600, 700 point face ripping rally, you know. So that's what happens. So I rather look at these things and be a technical, tactical dip buyer, which I sell into the rips and keep some and sell into the rips. Next day, the market opens up a lot. You know, is it easy? No. Is it that complicated? No. But does it drive you mad? Yes. That's just what we have to live with. So saying all that, this is what we're looking at here. So there are two ways to interpret this, and I showed this on my Twitter feed. This is still, believe it or not, even if we slip and slide, futures are down about 20 points right now. That's nothing. Even if we slip and slide all the way to 2380, it is still an inverse head and shoulder. An inverse head and shoulder looks like this. Okay, and there's your neckline. This is a neckline where the markets got stopped. 2640. 2640. So any break above that neckline, you blink an eye, it's going to be right at that infamous 2783 level. First, it's going to make a pit stop around 2710 because that was the last breakdown point or reversal point, whichever. That's the red line here. And these things are very important because if you get to understand these charts, what they're doing, then you'll be able to manage your positions better on stocks that are moving with the market. Okay, simplicity is the name of the game. So it's an inverse head and shoulder. And if it's an inverse head and shoulder, you want to be buying the pullbacks. If it breaks below this, that's a different story. That means we're going to retest the lows. So you can put out a short anywhere below these levels here, let's say 2630 or something like that. And even then, it could be bouncing off at this level. Whichever the case, if this level breaks, then you can put out a short there and just sit there for a day or so, because they won't last. These pullbacks won't last more than a day or two. So that's what I'm looking at. You know, it's still an inverse head and shoulder, still has potential to move towards the neckline where it's going to find that massive resistance that we found and correctly forecasted. And if it breaks above that, it is going to attempt very ferociously, not like slowly but surely, like ferociously, 400, 600, 700 points to get and kiss the Fibonacci 50 level, Fib 50. The Fib 50 is massive resistance. And 1 second, right there, 0.5. That means 50%, Fibonacci 50%. Read up on Fibonacci and stuff on Investopedia. It's great. So saying all that, the other simple positive, as you all can see here, that despite this intense volatility, mind-boggling volatility that we're going through, the stochastics continue to move higher. So that's telling you underneath the surface, the wave wants to move. It's going to zigzag its way higher. And it doesn't get crazily overbought till it gets into that 80 to 100 range. Every single time it's done that. Along the way, it's going to zigzag its way higher. That means 400 down, 300 up. But one way or the other, it's going to make it. High probability, 70 to 80% probability that it's going to make it up there. And that means it's going to make it up here, which it did, an attempt to make it up there to the massive wall, which is the Fibonacci 50 level, 2788 to be exact. And that's a long way up. Are you guys with me so far?
Yes. Yes.
Okay. Okay. Let's move on. Great. Just wanted to highlight these points. Now we're going to take a look at. So we looked at the daily. 1 second. Let me change my thing. Clean out these. Boom. Now we look at the daily. Now let's deal with the algo's gone wild during the day, right? So for that, what do? We look at the 1 hour chart and we look at the 15-minute chart. And here's your 1 hour chart of the E-mini futures. If you look at this chart, and if somebody didn't really know what was happening on the market, they'd be like, yeah, what's the big deal? What happened here? Nothing. Everything looks pretty okay. Right? If you just looked at this chart, that could be like, what's the big deal? You know, we went down a little bit. Look, his candles are still up there. You know, first glance says that it wants to move higher, at least towards 25.56, possibly towards 26.35. And that's hundreds of points from here. Am I right or wrong? Like if somebody that didn't quite know the markets were down like this much, that much, you know, what it did during the day, the craziness it does, they would look at this chart of the market and said, okay, it doesn't look that bad. Am I right or wrong? I'm just asking an opinion.
You're right. Yeah.
Yeah, you know what I'm saying? So that's the point that I want to make is like when you focus on the charts a lot and it becomes a habit, right? Just like any other profession, it becomes a habit. Like I said on one of my webinars, you know, people want to be successful traders and in 1 week, 1 month, while to become a successful welder will take you 3 years. so it takes time. So as you make yourself a habit of looking at these technical charts, playing around, drawing your own, and anyone needs any help, certainly reach out to me. And of course, my advanced coaching students, are taught all that. Is that you don't get as panicky, and you start to see, okay, this is what I'm seeing. So I did say that we were going to hold the Fibonacci 50 level, which was 2437, and guess what? Like clockwork, it did. And it's done it now quite a few times. So every single time that it's doing it, it's telling us that there are buyers at that level. There is demand. Remember, the buy points are known as demand zones, and the sell points are known as supply zones. There's supply to be sold, there's demand to be bought. So look how many times it bounced off that. 1, 2, almost there. 3, 4 times since the 26th of March. Since the 26th of March. You can always say even this one. 5 times, 25th of March. So this is telling me that the Fib 50, the 2438 level, has become a very important level for technical traders to watch. Remember, the markets are purely running on technicals. And of course, without the fun, the virus news, and it's not running on fundamentals, I'll tell you. Fundamentally, the market has basically said by its drop, enormous drop, like we saw on the monthly charts and stuff, has basically said we are going into a depression. The US economy is going into depression. You don't go into depression when you have $4 to $6 trillion and the Federal Reserve completely backstopping you with that much money flushing into the economy, both fiscal, which is or the government, which they finally did, and the monetary side, which Jerome Powell did a while ago and recently. You don't go into depression because all that money sloshing around buffers the fall. Just remember that. Remember that thing. Now, so saying all that, very important level to watch. The other thing I added here recently is the AD line. That's the advanced decline line. That's number of advances and number of decliners. And you notice that it's actually looking pretty good. And this little move down here from 4 o'clock, our futures down about 18 points. So when you look at the chart, it's almost meaningless. If they were down here, futures down 50, then I'd be like, man, this is getting really ridiculous. Sorry, ridiculous. But the thing is that when you look at it and you see that little blip down, which is 1 second here, it doesn't look that bad. So it really doesn't look that bad. So let's say, for example, we have a huge meeting in the White House tomorrow. You guys heard about that? Like
No. What is it about?
I'm sorry, what? I can't hear you.
I'm sorry. I didn't hear about that. What is the meeting about?
Yeah, this is very serious. This is probably the most important meeting of the month, of the year. President Trump is, he's already talking to MBS, Mohammed bin Salman, and Putin, and he has good relations with both of them, right? Even though I think that both of them are a bunch of bozos, the fact is that it doesn't matter. He's got a good relationship with them, and that's fantastic. So he's talking to them. Tomorrow, he's convening all the big oil company CEOs at the White House. And what the Arabs and the Russians want, not the Arabs, the Saudis want, is that they said, okay, if you want oil output cuts, 10, 15 million barrels less oil flowing into the global economy, and the oil demand is normally falling off anyway because nobody's driving. So things are not moving. So then you have to do it jointly. Like, in other words, all the big U.S. oil companies, OPEC, Saudis, and Russians, let's hammer out a deal together, which kind of makes sense. So he's having this very, very critical meeting with all the big oil heads, big honchos, US-based companies at the White House tomorrow. So it's very critical. It's very critical, and I believe they're going to hammer a deal. The ball is rolling. The ball is rolling. So if that's the case, then you know what the upper levels are. These are the levels the market. The best case scenario, the market is going to shoot up to 26.35, where we were just on what was the 31st? This was last Friday. Okay. and the 26th and last week. So this is the trading band that we're trading in. So be prepared for that. Lower end of the trading band for now is this level, the Fibonacci 50. So look at the charts. Don't just look at the prices on the screen that drive you nuts, and say, okay, market's still holding. So this is the way that I would draw it in a very simple way. It gets a little bit jittery here, a little complex, but eventually I think we get up here. And that is a good 135 points from here, from the 2,500 level that we're sitting on right now. So 135 times 8, get ready for a 1,000 point rally. Can it start off tomorrow? Maybe. Can it dip a little bit lower before it starts off? Absolutely. But if it breaks this level, that's when I start to get concerned. There's a big fat red line here where the huge rally started on the 26th of March, and that level is 2410. So these are the lines that I'm watching. If it breaks this stuff, I'm going to take down a good bunch of my long positions. I'll take losses on positions. I'm down on a bunch of positions. I'm up very nicely on a bunch of them that I scalped today and held. And the end of the day came roaring back. Net down for the day. So bottom line is that that's when I say, you know what? We break this level, I'll see you down here. Till then, technically it's fine. Not pleasant, but fine. You guys with me so far?
Yeah.
Okay,
Yep.
sounds good. Then the next one we look at, the final one that we look at, which I look at very closely, and I show it to you guys a lot, drives me crazy because it's the 15-minute chart. Bear with me. Is this. Now, this one I can also show you that it is a, let me just get the pen. But this is also a complex, large W. W is the dragon bullish pattern. In between, lots of chop. So, of course, let's get ready for that. Okay. And if I look at this W, it looks like this. Guess where it comes to? It comes to where there is a minor gap here, and that's at 2561. That's for the that's 60 points from here. 60 times 8, that's a 500-point move on the Dow. The pattern is completed again at the same level of 2636 on the short-term basis where we were at only a couple of days ago. And that's a lot more. That's more than 1,100 points on the Dow. And 1,100 points will push a lot of stocks a lot higher. But as it approaches these levels, there's always, like I've said, and you guys have seen it repeatedly, there's always some selling. So this is a short-term trader's chart, the one who wants to basically trade during the day or have an idea what's going on during the day. It is extremely volatile, and it's great for trading. Even though it's so fast, I just like sometimes just like I'm not moving that fast. So you can see here. And the stochastics tell you how quickly things get overbought, oversold on a 15-minute basis. So if you want to draw it like this, I'm just drawing some broad lines here. This is what it looks like. Now, many of you who know the terms, technical terms, there's a bull flag, there's a bear flag, correct? So so a bull flag generally, looks like this. And this is something interesting you guys will find interesting. I'm giving you the bearish view here. Where is the pen? 1 second. Okay, so bear flags look like this, things going higher, then they pull back a little bit, then they continue on their primary trend because the primary trend was higher, so it continues on that journey. Bull flags can look like this. This is very bullish. It breaks higher. Bull flags can look like a triangle and then break higher. So a bear flag is just opposite. A bear flag, it comes down, then it tries to go up, and then it basically, remember, the primary trend is still down, right? So it tries to jump, everything's looking good, boom. it follows the primary trend. It's the exact opposite of the bull flag. They have different shapes and forms, but generally that's the general shape. They can move sideways and then fall, or the worst of the bear flags are the ones which point down, similar to the ones like this, pointing up and then they fall. So this is one thing I noticed. Let me clean out the drawings. Let me get the pen. I have the pen. So if you look at this like this still looks like a bear flag. That means we could very well come back and retest today's low again. See what I'm talking about? I just showed you the pattern. So this is still a bear flag. So unless we break out substantially over the 2540 level, this bear flag is still intact. In other words, we could jump up here to 2525. That's about another 150 points. Market opens up. What happens by 10:30? Boom, they start selling it. Correct? So be prepared for that. So that's why these lines are drawn. This red line is drawn here because that's where the market had broken, totally broken. There was a bear flag here. So what I'm getting at, if you look at it like this, yes, we could bounce, but that bounce will be met with ferocious selling about 150 to 200 points higher. And then that could break because the primary trend is still down. Are you guys with me?
Yeah.
Yep.
So I'm not saying that's a high probability, low probability. I'm simply saying, but he cuts a deal with the Saudis and Russians. This bear flag gets negated. That means it's no longer valid. Just so you know, no longer valid. And in the meantime, lots of inverse head and shoulders and stuff wanting to go. So that's it. Now, let's dive into, so that's my overall. Oh, I gotta show you the VIX. I'm gonna change screens right now. So what it's gonna do, guys, it will, let me try to make sure I do it right. What it's gonna do is it is going to take about 3 seconds on your side for the screen to refresh, because I do wanna show you, actually forget about changing screens. I'll drag it in here from one of my screens. You know, right before this coronavirus thing, I'd priced out, I was going to upgrade to these latest NVIDIA processors and graphics processors, like 6 stuff. And then everything came to a screeching halt. Now, my guy at Best Buy, he does, he can't even take my computer in. So, I was really looking forward to that. I have very powerful computers, but I want to upgrade my NVIDIA GeForce, the graphics cards, to a level where I can just move at lightning speed. But hey, 1 second. Everywhere you turn around, you see this headline: U.S. entering a sharp recession, right, guys?
Yeah.
Yeah. So as stock traders, what do you think is the best time to buy the stock market?
When everybody's scared.
No, when see, by the time it's a recession, things have already priced it in. Everybody's scared anyway. Everybody was scared when the markets were going higher too. Now they're really scared, okay? Because when markets were going higher, believe me, I had a lot of traders who were scared because things were just moving too fast. Now they're like, no, you want to buy stocks historically. This is U.S. history. This is financial history. When you start getting those headlines, and the U.S. does show a negative quarter of growth, which it will, the GDP, the gross domestic product, that's when things are at the cheapest. That's when things are the cheapest. You want to buy as we enter the recession, and you want to sell as we exit the recession. And this recession is going to be literally like come here, gone. Like we were in a bull market, boom. 2 weeks, we're in a bear market. So you always want to buy stocks, whether it be through options or stocks, whether it be in your 401k or your trading account, when the news is that bad, and more importantly, we are in a technical recession, which might last a month maybe. You think once this coronavirus thing, it's not going to last forever, guys, obviously. And companies like Regeneron or Moderna or Gilead, they're so close to coming out with the vaccine, it's not even funny. There is going to be a huge relief which will be translates into thousands and thousands and thousands of points on the Dow, and you'll be like, man, why didn't I buy the crap out of the market in those horrible days? I guarantee you that. That's my opinion. I guarantee you that. So you want to buy when we're on the cusp of a recession. By the time the numbers come out, the market's already discounted it. Like Warren Buffett says, you pay a very high price for certainty. Does anyone understand what that means? It's a famous term. It says you pay a very high price for certainty in the world of investments. What does that mean?
When things are certain and things are going up, you pay the premium for it. But when things go down, it's cheaper, so it's uncertain. People don't know whether it's going to go up or not, and that's when you.
So you answered it correctly. By the time you know something, the market already knows it. So you pay a much higher premium, like Z said, for the same thing that you could have bought at a 40% discount. So Warren Buffett's famous line, I always remember that. You pay a very high price for certainty. By the time it's certain that it's happening, oh, guess what? It's already there. So instead of buying a stock at 10, you'll be paying 30 for it. And your upside is limited because by that time it's certain. So that's.
Hey, Frank.
Yeah, go ahead, please.
Yeah, it was just a comment about Warren Buffett, because he was in the news like before this crash happened saying he was looking for something big to buy, but the price wasn't right. It'll be interesting to see if he actually buys something. I heard he has enough cash he could buy McDonald's or Starbucks or Tesla even. He wouldn't target those companies.
Okay, that's a fantastic point, and I want to add something to it. Thank you for Paul for you sharing. You always share great stuff. Look, things are so goddamn cheap right now, and like Paul said, every time they asked him for years and years, do you want to buy a big company? He got 40 billion in cash. God knows how much billions. His is all cash business anyway, right? Insurance business, all that. He's like, no, everything's a little bit high and stuff. Well, everything's not high anymore. So like he said, whether it's a McDonald's, whether it's a Tesla, I feel that he might buy Boeing because that's a business he understands. Because Warren Buffett likes to buy businesses where he can basically understand. Food business, insurance business, jewelry business. He's not the type to go buy Amazon, even though he admitted he failed. He should have bought Amazon years ago. Will he buy Apple? Probably not. It's too technologically. I mean, yeah, of course he has tons of shares of Apple, but will he buy the company straight out? No. There's two things he'll do. And believe me, it's not Warren Buffett too. A lot of big companies that they're drooling right now because all these other companies that they wanted to buy, what in the consolidation phase, there's the buyout discounts that they're getting, and all these companies that they wanted to buy. In the biotech field, you'll see a rash of buyouts. It's going to happen. It's going to happen within the next couple of months or sooner. They want to buy when things are dirt cheap and they are cash rich. So bottom line is that I think one of my doggies got excited when he heard the word buyout. I should call him buyout from now. Bruno? He heard, I think one of the other doggies going out. So anyway, so bottom line is that, yes, there will be a rash of M&A, mergers and acquisitions in the oil patch, in the biotech area, even in the tech area. Apple's been looking for companies to buy. You don't think they have a short list of companies that they're going to buy?
They just bought one.
Which one? That private.
It's called Dark Skies. They make a really good weather app.
But they're not a public company.
Oh, okay.
Yeah, it's a private company. I know what you're talking about. Google does that all the time. They keep on buying all these companies, and I'm like, dude, I want them public because then we could participate in it. They're private companies. So Apple will announce one of these days. Who knows? There's a bunch of companies they could buy. They could buy Okta. They could buy one of their suppliers. They could even buy Broadcom. They could buy Skyworks. So bottom line is, guys, I'm giving you the bigger picture here. There's enormous opportunity of what is about to happen. And companies are just drooling right now to buy those things. Now, let me get, thank you for a great point that you made. And when buyouts start, oh my God, like all the companies in that sector go nuts. A lot of you who are new to trading, you don't, believe me, it's like a feeding frenzy when it starts. And these big companies, Warren Buffett included, Berkshire Hathaway, they're looking. And they are, like Paul said, they are going to buy one or two companies. What are they going to do with the cash? They're not paid to sit on cash. You know, they sit to buy businesses and grow businesses. Vertical integration or horizontal integration. Look those up in Investopedia. And that's it. All right, so let me give you something real simple here. This is a VIX chart. Now, I did put this out with some comments, but when you look at it, what does it look like? This is a weekly chart, by the way. This is not daily. This is not. What somebody, you know, anyway, I'm not going to pick anybody, but somebody new, like Al or Aldi. What do you see on this chart? And I'll explain in a second.
Looks like the market's going up.
Why? Because the VIX is. I asked you, what do you see in this chart?
Yeah,
This
because
is
right.
this is a VIX chart. Yeah.
Yes.
So VIX is opposite of the market. So
Right.
yeah. Because you look at these are weekly movements. These are not 1 hour movements. These are not the movements that drive us crazy because the market's up. These are the movements like that are happening from a telescopic view. So this looks ugly. If somebody said buy this chart, I'd be like, no way, man. I short this chart. Yes or no?
True.
Yeah. So if you're going to short this chart, that means, like Al correctly pointed out, this is telling us that the VIX is going down. Now, in between as it's going down, it's going to, and this is a weekly, so during the week, it's going to try to do this. You know, on the shorter term charts, we see it guys to bounce, and then the markets fall a little bit. But overall, it's a pretty ugly chart. Now, it doesn't mean it's going to fall all the way down to 2020, which, you know, is I don't expect that to happen. But along the way, it's going to make stops and starts. But I don't see why the VIX can't fall back to my next marker, which is around 35 to 40. It's at 50. Why can't it fall down to, you know, even when the market today was up 500, then went down like 100, the VIX didn't move. The VIX was still down 6%. Did you guys know that? So it's very interesting what's happening out there. Market's trying to send us some signals here, but we, like I said, point one, we're all impatient. We're like, man, you know, how's this? So, but I'm just showing you that there's underlying pressure on the markets to pop up a bit. And that's exactly what happened at the end of the day. So the other thing, aside from these very ugly candles, when you look at the candlestick, it's very ugly. And this is why technical analysis is so precious, because everybody's looking at stock prices and stuff and, oh, what the market do today? Nobody looks at this stuff. Technical traders do. So I'm looking at it. I'm like, okay, this is pretty interesting. Now, what is more interesting is what? Which will give me an idea whether or not this bought ugly red candles. This is a very red candle too, but it bounced really hard from 50 to 75.
The internals are interesting.
Yeah, so what do you, I'll ask Al too, because Al, you got a keen eye and you understand this here. What do you see on the internals, what we call the slow stocks? And I explained this thing very well. And if anybody didn't listen to my last VIX video training that I did with on the new member advanced coaching sessions, you guys are being stupid. That is probably one of my best sessions that I've done with great people, new members, hungry to learn. Okay, so I'm not going to ask anybody. I know the people who were there, but the people who didn't listen to it, you guys better go listen to it right now. It's right, you know, it's right there. Please, too much noise. So what are we seeing here on the internals? Al.
It's hard to see with this little phone.
Oh, you're on the phone. Okay.
Yeah.
So I'll let you go on. The Aldi, what do you see? You can always zoom out, zoom in. You know, Aldi, you there?
Yeah, I'm here.
Okay, so what do you see? Remember, I explained to the VIX. You understand the VIX, man. You were answering all the questions. You know, you were on that training session. What do you see on the internals, on the slow stows, which I told you is one of the most biggest indicators of what might happen? Is giving you an early warning signal.
Yeah, it looks like it might go on a downtrend.
Correct. It's called a crossover down. When this crossover down happens, ladies and gentlemen, that's when you get that sustained rally towards 2,700 plus. 2,800 plus. I believe this is very exciting because when the VIX starts to go down, remember, this is weekly. Each candle is a week. Can somebody please mute their microphone? It's a lot of feedback coming, please. So when this comes, like it happened back in December of 2018, The VIX popped up, December 24th massacre. And guess what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 10 to 11 weeks. 11 weeks. Wow, that'd be nice. 8 weeks of a rally, man. Geez, it's going to feel like, unreal. It went down and it bottomed before it started to rise again. But then it stayed in this band. The VIX was stuck in a band of between 15 and roughly 15 and 20, or 12 and 20 for months and months. So if this is going to happen, and this actually crosses down, that is the most definitive signal that you want to buy and stay long on swing trades, and you want to buy tactical dips. Now, this is a weekly chart. During the week, a lot can happen, but this is the real big picture. When I saw this yesterday, I smiled. I said, man, that is probably the most powerful indicator, telling me that regardless of the crap that is happening now, we're going to have a very powerful quarter coming up, which started yesterday, April 1st, second quarter, because first quarter ended on the 31st. Are you guys with me? So what we're looking for, if you want to sort of look at the bigger picture, we're looking for a crossover down, similar to this. When you get that crossover down, it is sweet. The market just goes like this. I'm not saying the market's going to go retest its size. I don't think so. But the market can very easily go to 2,700, even go to 3,000. Markets like round numbers. That's 3,000 S&P 500. That's a lot. So this is a very critical indicator. Now I'm going to show you the same chart of the VIX on the daily, if you don't mind. This is the hourly. This is what we see during the day. And if you look at this VIX chart, despite all the thing, it's still in a downtrend. It's getting oversold though. That means it can pop up back up to the upper end of the Bollinger 58. That means the market will be down 400 points. But it still doesn't change anything, because every time it hit the upper end of this downtrend channel, this is a downtrend channel, it got hit. It's still moving lower. It is still moving lower, unless it breaks out in a big way. And I explained that to you guys once before. If it goes to 70, that means we're coming down and retesting 2,400, 2,300, whatever the case may be. So this is another indicator that I watch very, very closely to get an idea of whether or not is this a real sell-off, or is it one of those just fast-moving intraday stuff. You guys with me so far?
Yep.
Yeah.
Now,
Yeah.
all this stuff is fun and good, but it has to, like they say in life, you can be a great academic, but what are you doing with that information? So what I'm doing with this information is I'm trying to manage my long side, long positions, and if I do some quick shorts, I bought some hedges. In fact, I probably was that was the perfect wrong timing. I bought a couple of puts at $1.60, and it never was at $1.60. It closed at 60 cents because the market turned around and ramped. So I'm the ultimate contrarian indicator. How about that? But I did that because just in case. So I bought a couple of puts because all my other stuff is long. So the fact that it went to 60 cents, my rest of my stuff went like a rocket because I kept on buying the lows today, as you guys know. AMD, Regeneron, blah, 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 blah. And the one that really pissed me off was DocuSign. Like, what? There was one big sell program and they brought it down. Yeah, yesterday was doing fantastic, the day before. But hey, what to do? Rest of them did great. So bottom line is that, and then I bought Shopify at the lows. And if that thing goes, oh man, like forget it. Shopify is like the ultimate company. It's Amazon Junior. It's Amazon on steroids. Smaller company, Canadian. You guys know Shopify. E-commerce platforms for small businesses. So anyway, so this is the VIX that I watched during the day. That's the VIX that I take a peek at to see, hey, what's going on in the bigger picture. I don't look at it too often. And then this is the one which is the daily. And the daily also is, like I told you guys, is still sliding down, but it's starting to get oversold. So the most it can slide down to, in my opinion, is probably, again, maybe 45. or lower, but it's still starting to pull back. But once it gets down here, same old story. The markets will basically pull back a little bit, the VIX will go up, but even the daily is lower. That's all. Okay, this is the same chart. I just wanted to show you. Now, in the meantime, start thinking of a few stocks that we can look at, guys. Then we're going to wrap up. I don't want to keep this too long. We all need our sleep. Let me put up my Thinkorswim. It's so choppy. Unbelievable. Okay. No one, any stock? No one wants to look at it. Okay. No one loves stocks anymore.
VVUS.
I actually have one.
One person at a time. Who's screaming?
sorry.
VVUS.
Yeah, VVUS is a complete spec play. It pissed the crap out of me that while we were buying it, like it didn't buy it on a technical basis. Okay, it started to move, everything looked good. The following day, the stock, like I put out there, the stock, I'm like, why is this stock down like from a buck? You know, we bought it around $3 to $1.60. It's because they did a secondary offering. Okay, if you want to know what a secondary offering, they sold more shares to their investors and to a general public to raise money. So it dilutes the share and the stock is down here. So there is no technical chart here. I believe the stock will bounce back. I left it in there. I bought a little bit more. It's a crapshoot. But the company is real. The company's real. The reason it fell from these levels, okay, and it's starting to move up very nicely is because they did a secondary offering. Look that up on Investopedia and you will know. Once you do a secondary offering for at least a bunch of days after that, the stock pretty much sits around at those low levels. So that's the answer to your question. It's a crapshoot at this point. Is the company going to go bankrupt? Absolutely not. They just raised a whole bunch of $1 million. Investors bought from them right around this level. Any day you wake up, boom, it's doing. The stock didn't just move up here for fun. It was for a reason. Read up the news. Anytime you have a stock, you want to know a little bit about it, read up the news on it. There's so many sources to do that. And so now it's down here, it'll pop. So
Yeah. I
next
bought
up.
a whole bunch, so I hope it pops.
Well, that's because it's good. It might take time, but it doesn't take that much for these companies. Remember,
Right.
these are real companies, and the fact is that these are sometimes they are shooting stars. Boom, they go. And if you look at the daily chart of this stock, honestly speaking, this was I was really pissed off. But what? I didn't know it was a secondary coming. And whichever the case, you still have a very wide range. You're at the low end of the range. Upper end of the range is $4.50. This is like playing an option. But real company, and learn on it. Find out what they do. It's a biotech company, and they're not like a penny stock like no one knows about. You know what I'm saying? So
Right.
that's one. Next stock, please.
Hey Frank, this is Zafer.
Yeah, go ahead.
Now, I wanted to see a CRM because they're kind of in the same business.
CRM?
Yeah, Salesforce.
Yeah, of course. So Salesforce, the same story. This is a daily chart of Salesforce, and obviously the ultimate time. Oh my God, the stock when it crashed, it went to 115. I don't really track Salesforce, and it went to 159. So it's right here. Same story. If you want to trade it, the stock is good for $142 right there, the upper gap. And I believe that the stock will move. This moves with the market. It moves with the market, with the NASDAQ. Okay, and technology. So there's nothing to on a broader stroke, unless they really lowered their guidance and all that stuff. This is serious. I mean, it's customer relation management, CRM, and Salesforce. These guys are needed more and more, being a software company. I expect the stock to go back to 160. Now, this is very similar to my favorite stock, at ServiceNow, which is much more specialized. And ServiceNow is one of those companies that the CRMs of the world or Microsoft of the world will buy. I'm telling you right now. Okay, so ServiceNow, want to read up on it? Read up on it, what they do. I mean, they are the ultimate masters, and I'm not a technological tech guy, but they, as in real-time supply chain management. And everybody's working remote now. Everybody's working remote. Large corporations cannot afford to just sit on the conference call and say, oh, you do this or you do that. They have to have automated software systems connecting them wherever they are around the world. at their houses, away from the main office. And that's why they need ServiceNow. It's an unbelievable company. So let's take a look at ServiceNow. But when the NASDAQ is selling off, they'll get hit. All right, let me get this highlighter out of the way and show you a couple, So ServiceNow's daily chart looks like this. The stock was doing great till a couple of days ago. It was at 295, ready to hit the lower end of 305 and the gap here at 314. Fell with the market, went up with the market. It went to 292 and then went up and then fell. Today, all the way down to 248, 259. So how do I chart this? Without getting too technical detailed on the charts, let me just take the pen and draw it for you. The trading range is 300, 305, and 250. You got 50 points you can trade on this stock. In the meantime, when the markets are acting like they're on crack and you have things all over the place, the stock unfortunately will be stuck. I expect this stock to turn around within days. I have the April 9th calls. As I'm getting closer into next week, I'm going to go into the April 17th calls. I'm ready to buy the stock lower. I'm ready to buy the stock higher, because by the time it takes out the blue line, the 20-day moving average, it's going to go nuts. But why should I wait when I can buy it at 259? When I bought it lows today, and I can buy it at 250, and you can buy the cheap calls. 2-cent calls on Tesla, which are like a joke. They're like as good as zero. Closed at 30, 40 cents when the stock gapped up. Tomorrow, they might open at $1. That's 5,000%. That's 5,000%. It's not a joke. It's like putting in $100 and taking out $5,000. So bottom line is that I like this company. I think they're in the right spot, unless they say something really stupid. The CEO was on a couple of days ago, and he said the business is booming because everybody wants their business now to automate themselves. So, all right, guys, if you don't have any, I'm going to wrap up. And I think we went over a whole bunch of important stuff. The market's down 15 right now. The futures means nothing for tomorrow. Let's just, I have no suggestions. Just if it gets really crazy, don't trade. If it's looks too easy, sell. That's really my philosophy. And look at the charts and figure, and look at the comments and stuff that I put out, and expect the market to, pretty much like I explained, the market's a coiled spring. It wants to go higher. And please pray that President Trump can get the Saudis and the Russians and hammer some sense into them, and they all cut a deal. And then it's like, see you later for at least a day or two higher. Besides from that, let's not get depressed. There's so much bad news out there. I hear about people. I heard about some people that I know who caught it. It's just a horrible situation out there, guys. And it's no fun. So we'd say a prayer for everybody. We're all stepping up. U.S. companies are stepping up. And God bless America. Get some sleep, guys. Good night. See you guys tomorrow morning.
See ya.
Good night.
Good night.